Good morning, everyone. Thank you for joining us on Thursday, the 5th of December, for this webinar looking at the UK Top 100, the changing landscape and what it means. I will start in a second and kind of get going, but I'll give everyone a few minutes to dial in. I know that starting anything directly on the hour is always difficult because you have to go and get coffee and croissants and all those lovely things that we do first thing in the morning. So we'll get going in a minute. Hopefully, if you travelled into work today, you had a more fun journey than I did. Northern Line was very busy this morning for some unknown reason, which was always fun coming into London. Normally, I would suggest that you pop something in the chat, but I don't think we've got the chat open today. We do have the Q&A open. So for any point during this webinar that you want to ask us a question, you can pop something into the Q&A. And I or one of my guests will answer that during the webinar, but for sure, the Q&A will be open throughout this webinar. So 100% you can feel free to ask myself or my guests any questions. So we'll give it another minute just to allow people to drop in, and then we will get going. Russell, you're on my screen at the moment. Did you traveling to work today, or are you working locally today?
No, I'm in London today. So yeah, I got caught across the Central Line. So there were just a few minor delays coming across, but yeah, it wasn't as bad as I first thought when I woke up this morning, because I heard severe delays and all of that banded around, and you think the worst.
Oh, you always do. Paul, you look like you're working from home, so I'm assuming your commute was quite easy this morning.
I just walked up the stairs.
The biggest danger you have walking up the stairs is spilling the coffee, I find, in the mornings. And Sarah seems to have dropped off for a second. I'm sure she'll be back in a sec. Right, well, let's get going. Good morning, everyone, and welcome to this webinar looking at the UK Top 100, the changing landscape and what it means. So we'll be going, well, I'll talk to you a little bit in a second. Let me introduce my panel and my guests for today. In fact, I'll get them to introduce themselves, because I think, like, rather than listening to me talk about it. So let's go first to Sarah. If you'd like to just say hello and do a quick introduction, that'd be fantastic.
Absolutely. Good morning, everyone. I'm Sarah Gardner, and I am a partner at Gibbs. I also day-to-day head up our outsourcing division. Alongside this, board with our private equity partner, April Capital.
Fantastic. And Russell, over to you. We'll do it in the order of the slides because it makes sense that way.
Totally makes sense. Hi, everyone. So yeah, Russell Frayne, Director of Transformation here at Gravita. We are sat with our private equity backers, Tenzing.
Fantastic. And last but certainly not least, Paul, over to you.
Hi, good morning, everybody. My name's Paul Finnegan. I'm now a consultant, but was for 13 years Chief Operating Officer at Blick Rothenberg, who were one of the first firms to take PE investments. And for the last 6 years, I've been consulting to a mixture of directly to fast-growing accountancy firms, but also to PE firms looking to invest in the sector.
Fantastic. So, Paul, you're probably part of the reason why we're sat here today having this conversation. So it's an interesting one to dig into. And for those of you that don't know me, my name is Phil Hobden. I'm the UK sales lead for Silverfin. For those of you that don't know Silverfin, we are a compliance software in the cloud, focusing on working papers, accounts production, and corporation tax. And that's all you'll hear from me about Silverfin at this point, because we want to talk about this topic, right? Good. Well, look, welcome, Sarah, Russell, and Paul. Thank you for joining us today. So when we get going, I want to run a small poll. So I'm going to put this up on the screen. So just give me 2 seconds just to launch this. So I'd like you to answer. Is the concept of a top 100 relevant anymore? 3 answers: yes, yes, but only if you're in it, and no. So if you could put some votes on this in the poll, and we can kind of have a look at kind of the flavour of the room and what people think. Clearly, what we'll do is I normally wait till we get to about 75% on the polls, and we'll kind of talk a little bit into that as we go through the webinar today. So we're about 63%. So anyone else want to pop in? I'll give you another couple of seconds. Fantastic. So I will end the poll and I will share the results. So hopefully you can see these results on your screen right now. And overwhelmingly, yes, but overwhelmingly also yes, only if you're in it, right? So, and I'm sure this is a concept that we'll talk about. Just one person saying no, which is good. Excellent. So that's kind of set a little bit of a flavour for today. So we're going to cover over the next 50 minutes. The call will be recorded. And of course, like I said, you're welcome to pop questions in the Q&A at any point throughout this webinar, and we will try and get to them as we work our way through. So firstly, we're going to start off with a topic around what trends have we seen in this year's top 100. We're going to then dive a little bit more into what's driving the surge in M&A activity within the accounting space. Now, obviously, and very clearly, this has been a topic that's been very prevalent over the past probably 3 or 4 years, going back further, but certainly the last couple of years, we've seen a massive escalation of that. And Sarah, Gibbs is a perfect example of a firm that has acquired a huge amount of businesses during that time. We'll then look at why are PE organisations investing and what challenges or opportunities do this bring to firms. And then finally, we'll kind of look at how important is size in the grand scheme of accountancy and accountancy firms. So those are our 4 topics that we're going to be looking at today. So let's get started with what trends have we seen in this year's top 100. So by the way, this is not going to be a slide heavy presentation. This is pretty much it for the slides. Russell, Sarah, you've done webinars with me before. You know that I'm not a great fan of slides. I prefer the conversation part. But these are some trends that we've pulled out. And Paul, I mean, I know this is kind of your area of expertise, especially, but anything that you've seen from the top 100 while I leave this on the screen and kind of that and the changes over the past year that you think might be relevant?
So I think, I mean, it's not a surprise given the level of PE investment and consolidation that the size of the firms, particularly in the sort of the 20 to 40 bracket, has gone up significantly, and there's lots of reasons for the desire to invest and to, I guess, achieve economies of scale, which perhaps we'll come on to a little bit later.
Yeah, excellent. And I think, look, we've identified kind of 8 key trends. So M&A driving growth, well, that's certainly not a surprise for anyone on this call. Technology investments, so significant tech spending, especially by Deloitte, but other firms as well. And again, like, Gravita, Gibbs are 2 great examples of firms that have acquired, that are growing, but also are really investing in that tech infrastructure. I'll get my words out this morning. Innovation impact. So, firms are embracing AI and automation and are seeing notable growth and improved services. Ongoing consolidation, with more than 35% of the top 100 firms in the UK currently involved in M&A, and clearly, probably a load more that we don't even know about yet. And I'm sure that will come out, because clearly, as a lay person, we only tend to find out about this stuff after it happens, when it hits the trade papers. Record fee income. PwC broke the £6 million barrier with strong performance across all the top firms. It's fair to say that talent challenges remain. So a lot of the top 100 firms in the UK and beyond still report challenges around talent, attracting talent and retaining talent. And I think, there's a degree that we can talk about the, technology and the investment and how that actually plays to help talent. Advisory shifts, well, guess what? Like, we're always trying to add more services, more depth and more kind of strings to our bow to try and kind of maximize our revenue. And then, there are a load of new entrants in the top 100 firms in the UK, and where private equity has helped bring some new businesses into what we look at as the largest firms within the UK. So those are some of the trends that kind of we've identified here. Sarah, anything that you've pulled out from looking across the list and what you've seen?
Yeah, I think looking at that ongoing consolidation piece, and perhaps it's the world I'm living in at the moment, that number actually felt quite low to me. I think it will be really interesting to look at that trend last year, because obviously we are talking about the largest firms in the UK, and some of those consolidation models have been built with slightly smaller firms, and you can see the transaction levels now increasing, or the size of the transactions. So I think it'll be interesting to see next year if that number is higher again.
Yeah, absolutely. And I think you're right. I think, yeah, that's definitely a good marker for us to be watching. Russell, how about you? Is there anything that you've seen within the kind of the newest of the top 100 firms in the UK?
So I think we all expected there to be activity in the current year. Probably not as much as I was initially anticipating in terms of new investment coming into that sort of top tier. But for me, definitely, I think the talent challenge, I think private equity is enabling firms to kind of go into a bigger network, a bigger pool of resource and people. And I think what I've noticed is that acquisitions now are going down more of a sector or niche focus. So they're trying to expand, going back to service offering and advisory and additional revenue lines and things like that. So I think that was a fairly obvious trend that I could kind of see sort of playing out. The one for me is that obviously we've got advisory shift and we've got the way that revenue is being delivered. For me, the revenue per partner, and obviously these are all subjective type metrics, but over the number of years that I've been looking at revenue per partner or revenue per head, I've not seen a dramatic change. And with all of the PE money coming into this space with investment in technology, ongoing consolidation, bringing better integration between these sort of fragmented firms that you've acquired, cynically, I was expecting to see revenue per partner start to go up, especially take the sort of top three, top four, where the revenue per partner is significantly weighted to much larger corporate jobs. I was expecting to see a shift in that sort of revenue per head type number.
Okay, interesting. And I guess a question for all of you: were you surprised in general at the gap in the revenue wasn't quite as big as maybe I was expecting between some of the larger firms? So like I predicted at some point there would be more of a gulf between not the haves and the have-nots, right? But like the larger and the smaller of the larger firms. But that gulf's not probably quite as big as maybe we expected. And again, there's probably reasons behind this, but did that kind of surprise anyone, or do you think that's kind of expected?
I think if I would comment on that, just jump in first, because I was thinking about this the other day, Phil, after we chatted, and I think if you look at a private equity life cycle of being sort of that kind of 4-year window, say 4 to 5, you'll find like most of the early investment happens towards the beginning of the life cycle and it will trail off towards the end. So I think as we've got these different equity houses in the market now with the different aggregator firms, they're all at different stages of that life cycle. So I think what we kind of see is this sort of jump approach up the table based on where they are and how aggressive they are in the market. And we noticed that with the likes of Summer coming into the market this year as a consolidator for the first time, as opposed to being, independent.
Yeah, that was an interesting one. Paul, in terms of this area, anything that you've spotted or your thoughts on these trends?
I guess coming from Blick Rothenberg, from when we sold in 2016, I was interested to look at how the top 100 now compares to what it was 8 years ago. And I think to pick up on Russell's point, the level of investment has taken, there's way more firms in that sort of 100 million turnover bracket now. So that previously that would have got you into the top 10, top 12 in the UK. Now 100 million only gets you into the top 25. So there's a real difference. And then, but if you look down to the bottom of the table at 100 in 100th place, that's actually a smaller turnover company than was in the top 100 last year. So the consolidation has increased the size of firms near the top, but at the bottom it doesn't seem to, obviously hasn't made as much difference, and some of the smaller firms have been absorbed into the larger practices.
And do you think that will be an ongoing trend of the larger, as the larger firms get larger, the entry point to be considered within those top 100 firms within the UK gets a little smaller? So do you think that would be an ongoing trend, or do you think that's just a blip for this year?
I think it's really interesting. There's lots of firms who are strongly independent, and as long as they can continue to compete comfortably, and can manage the investment to keep pace with the technology, then they may not see the need to merge or be acquired. But I think we've all seen firms who were staunchly independent, Blick-Rothenberg included, who had always said we're a strong independent practice, but then changed their mind or circumstances changed. So I'd love to roll forward 3 years and look at what the top 100 looks like then.
Yeah, it will definitely be an interesting marker, and I think the trends that we're seeing now will definitely, I think a lot of them will continue in the future. But you're right, that's an interesting point. So we've kind of looked back at where we are this year. Let's kind of look at our second topic then, and what's driving this surge in M&A activity. Now, for some of you on the call, that this might be an easy answer, right? You go, well, of course, but actually, it's probably a lot of people looking in from the outside, and we've seen it not just in the accountancy space, but in the accounting technology space. So this week, it was announced that Dex had been acquired by another HG company. And this is, early on this year, we saw Xero being purchasing Sift Analytics for I think it was 70 million Australian dollars. I don't know what the exact translation of that is, but it's a lot of money. So, there's a lot of M&A activity, both in the accounting space directly with practices and in the accounting technology space. And it seems to be going faster than ever. So, Sarah, maybe I'll come to you first. As someone that is doing a lot of this movement within the market, for you, what is driving the surge in M&A activity, and why now?
Yeah, I think perhaps if we explore first why people are selling, as opposed to perhaps why people are buying. Yes, of course, there are some people who are looking at their succession planning, and the sources of finance perhaps aren't there to facilitate that. But I do think that we need to dispel a little bit of that. There are some really entrepreneurial businesses, and Paul will be able to talk about some of those businesses he's speaking with, that are actively deciding to build something to sell, something that ticks all of those boxes that will attract private equity and attract the likes of ourselves and Gravita to work with them. These are not traditional businesses who don't have any other options. They are quite exciting businesses, and there are also, I try not to talk about age too much, but there are some really young, entrepreneurial, ambitious partners who are backing these transactions.
Yeah, that's an interesting point, because I think maybe a lot of people assume that M&A activity comes from older partners wanting to exit, or businesses that have stagnated. That like how do we maximize the return now? But actually, what you're saying is that's not always the case. There are people that are actually building businesses specifically to sell. Russell, what's your take on that?
Yeah, without getting into the boring intricacies of what equity houses are looking at in terms of boxes they're looking to tick, I think Sarah's right there. I've definitely seen businesses now coming into the market being a bit more boutique, a bit more niche, and some of that is born out of frustration. And I think a lot of these businesses and partners have looked at this M&A model. It's been around for a number of years already, right? And it's a case of show us what that looks like and how it evolves over time. I think at this point, we've got to like this tipping point where the equity houses are kind of getting it, and they can still see that there's ripe for change in the industry. Accountants are accountants at the end of the day. The pace of change, the rate of change, the pace of technology is probably at its peak from where it has been for a long time. So I think the interest is definitely there. What was quite interesting with what was released this year was the number of new equity houses joining the party. So there's definite interest there. They've all got slightly different strategies in terms of what they're trying to buy, and what they're sort of looking for. So it's really interesting that there's there's no one hard and fast rule at the moment in this space, which is really refreshing. But I have definitely seen these sort of new challenger practices popping up where they are very, very much focusing on all of these tick markers for potential future private equity acquisition.
Paul, anything that you want to add to that? You're obviously seeing it from you've seen it from both the inside and the outside.
Yeah.
So it'd be really interesting to get your take as well.
So I think, I mean, to come back to your question of, you know, why are we seeing the surge in M&A activity? I think the starting point for me is look at what is it that clients want and what is it that they're buying. So in very simplistic terms, you've got compliance and more process orientated work, and then you've got advisory and more technical. And I think what you've seen and Russell talks about it in terms of the investment in technology, the ability to work more efficiently, deliver what the client wants, with less labor cost, timely use of technology. To invest in that, you probably need some economies of scale. So the desire to acquire firms, build scale, spread the cost of the investment in technology is there. On the advisory side, firms are acquiring perhaps not either boutique or firms where they have a complementary skill set that allows them to provide a broader range of services to clients, and at the same time then attract the best quality people. So I think there's those two drivers around technology and scale. I'm not saying that, you know, the size is necessarily best, but it is certainly one way to build a practice that is both efficient and has the quality that clients are looking for. I mean, I'm a buyer of accountancy services, and I want to know, for my small business, I want to know that things are being done quickly, efficiently, and in the best way. And I want access to people when I need more complex advice.
Yeah, and I wonder if kind of this loops into our fourth topic and kind of move it around a little bit. But does size matter? You know, how important is size? And I wonder, going back to the poll at the beginning, you know, does the top 100 matter? Overwhelmingly, well, not overwhelmingly, but certainly the more popular answer was yes, but to those in it, more than yes in general to the outside people and kind of everyone else. So do you think, to your point about clients and services, do you think position ranking to in any list of any size or kind of any credibility, do you think it matters to the end user, or do you think it's more an internal metric, or is it more just a kind of an industry metric? You know, does size matter? I think there's a good question. Russell, does size matter?
So if we look at the end consumer being the client base, and obviously my legacy firm was a sort of rural practice based in North Devon. Now, all of a sudden, if I'm going out to our client base saying we're a top 10 private equity backed aggregator, they're like, you're far too big for us now. Even though it's the same team, the same people doing the work at the same location, largely like for the same fee, but we can deliver so many more services than we ever have been able to for you before. There is a perception of you're too big for us, and then all of the other perceptions that go along with that. What I would say though is it does also then have the opposite effect of attracting clients that you may have not been able to attract before. So there's both good and bad with all of it. And then similarly from a staff base as well, again, there's pros and cons from both sides. But I think in terms of just focusing on revenue, and we league table everything in life, right? And you have to put a metric on it, and it'll always be a controversial metric because somebody will focus on something else. I think revenue is a good indicator in terms of size and scale. There are other indicators that we could look at in terms of delivery model, quality of service, variety of service, spread, all of that sort of stuff as well. So I think, you know, whilst size is a metric, I think it's a valid metric for the size and scale of the practices in our industry. My caveat would be at a consolidated level, because I think that the breakout of the aggregators is kind of muddying the water a little bit, and we saw that this year. So I think it is relevant still, but I think there are also other markers that we could also top 100 and give you a much different list.
Yeah, that's an interesting point. Sarah, internally for you, you've been through huge growth over the last 18 months. Does it obviously it matters internally to the partners and the owners of the business, but from a staff perspective, what's the impact of your staff as Shaw Gibbs has grown kind of exponentially over the last few years? What do they feel? Are they kind of, do they look at like rankings and position and do they have that same sense of pride and ownership in it, or is it something that you're kind of fostering within the culture?
Firstly, I hope so. It's something that we've very much publicised internally over the last week or two, and something that we're seen to celebrate. I think we're only happy to celebrate it knowing that our staff retention is also very, very positive, and that we're seeing that uptick in our employee engagement surveys and what have you as well. So internally, like Russell said, there's other metrics that are as important. And I think it'd be utterly fascinating to see this list cut on other metrics such as EBITDA or staff retention or what have you.
Yeah, I mean, staff retention, you know, in an industry that's struggling with talent and talent retention, I think measuring a list based on staff retention would tell you a very different story. Paul, from conversations that you have with both on the acquirer side and the accounting firm side, you know, does size matter?
I think, I mean, going back to the point I made earlier, I think it's important in terms of having the level of profitability for investment. I think for clients, I don't think it makes any difference whether you are 30th or 50th in a list. It might make the difference between if you're 10th or 100th, but the closeness of the rankings I don't think is significant. I think it's useful for people, as you mentioned, for suppliers to the industry to know who sits where and what are the different sizes of the firms. I think it's helpful for recruiters and particularly graduates moving into the sector to understand where firms sit. But I think it's more about generally around the size rather than a specific ranking that's important.
I love that point about graduates. I just want to unpack that for a second, because I think actually probably we don't think about that as an industry as a whole. But you're right. I remember. I mean, I remember when I was back at university. It was a fair long time ago, right? But when you have your careers fairs, you generally would go over to the bigger companies, the bigger names. You'd research them. You'd see where they were and comparison to their competitors. And you'd be like, if I was looking at the accounting industry, if Shaw Gibbs turned up to, or Gravita turned up to a careers fair, I want to talk to those guys because they're growing, they're expanding, they're kind of acquiring, they're quite dynamic businesses. They would definitely get that attraction from me. So I think that's a really interesting point in a industry that is struggling to retain, attract, and grow staff. Yeah, maybe that is a really important measure. Russell, do you kind of leverage that at all in any of your graduate activities within Gravita, or kind of outreach to universities or colleges, or do you go for a different approach?
I think, like to Paul's point, it is very useful in terms of just positioning yourself, what the intent is of the practice, where you're looking to go in the market. And I think it does set a bit of a precedent where historically you've been aggregating all these firms, they're separately, individually independent, and they've all got their own different approaches. And when we talk about talent retention or talent attraction, it's a lot more difficult when you're trying to do that just sort of handcuffed to like a local sort of location as well. So I think it does really help, and we're quite vocal around, you know, what we're trying to achieve, where we're going to the market, where we're trying to differentiate ourselves. But I do think, like, just from going back to the size piece, like, still I think that's not necessarily indicative of the overall, because you very much, like, culturally still have different approaches based on location as you know you sort of grow and scale. So yeah, I think it provides intent in terms of where you're looking to move the business, and gives any new sort of starter or graduate looking to join a good idea of what they're joining, and shows them the appetite of what they're sort of going to expect going into that practice.
Yeah, I think think that's a really, really good point. So we've talked about kind of trends. We've talked about kind of the surge in M&A activity, and we've touched on size. One of the things that all of you have mentioned individually is, I guess, the impact and opportunity that investment and M&A brings to a practice. And, you know, full disclosure, Sarah, Russell, you're both on this call because you are users of Silverfin and that technology, right? And you're utilizing the technology you have as part of your growth and kind of streamlining of firms. But what challenges or opportunities has the kind of M&A created within Shaw Gibbs, Sarah, and then Russell, I'll come to you, and then Paul, we'll get your view from as well. But kind of, you know, that rapid expansion, rapid growth, what opportunities does it bring you? And I guess what challenges has it presented as well?
Absolutely, and I think we've touched on it already in so many different ways in terms of that scale and that investment that brings, or that opportunity for investment. And as a real life example, the latest two much larger mergers that we've done, most of them were looking at platforms such as Silverfin, but had chosen to put them to one side because as a standalone business, they just didn't quite have the bandwidth to make that investment. So they already, you know, one of them only having joined us a month or so ago, has automatically joined the Silverfin Champions Group and is very keen to roll it out very, very quickly. So that's just something they couldn't have done in their old business. Whilst we have to be careful of our overheads and perhaps people that have failed with these types of models in the past, you know, we now have a learning and development team of 3. One of the main attractions for more senior members of the team joining us at Shaw Gibbs is that management development program. And again, in some of these acquired businesses, they just didn't have that level of investment or team to help them support that. So there's huge opportunities ultimately for our people and our customers, because again, the level of tax expertise that both of our businesses are now able to deliver, we just didn't have at our fingertips as independent businesses.
Yeah, that's interesting. So kind of ability to deliver more rounded services and ability to streamline technology. And I think we've all heard the horror stories around some of the M&A activity at the early days of this trend, where they were buying firms with multiple conflicting technologies and multiple conflicting processes, and then trying to get them all to operate under the same banner and the same workflow, and it clearly never works. I remember a long time ago, I went to visit a firm and I had a conversation. It was an older gentleman. He'd had the firm for 25 years, maybe, and he was looking to exit. But his technology stack was really old. Like he was barely using past Excel, but like the bookkeeping was very manual. The receipts were very manual, and he wanted to try and get 2 or 3 times revenue as a sale multiplier. And I kind of put him in contact with someone like Paul. If I'd known Paul at the time, it would have been with Paul, but someone like Paul to say, actually, you're not going to get to that point with the technology stack that you have and with the clients in the state that they're in, because ultimately no one wants to buy that level of complexity and confusion when actually there's another practice next to you that could plug straight in. And I know we've discussed this, Sarah, previously. You're quite it's a consideration in your M&A journey, isn't it? The technology and how that firm is set up currently.
Yeah, increasingly, certainly, as we said earlier, as acquisitions are becoming slightly larger, the time and the investment in then having to unwind systems to then fall into our systems also becomes proportionately larger. And so that's always my biggest piece of advice to independent firms. I totally respect your independence, and it may be like that for decades to come, but it may also not be. So my advice is to run your firm as if you were looking to exit, and if you don't, then so be it.
Oh, good advice. Paul, what are the kind of key challenges and opportunities you've seen, both within your time at Blick when you were kind of going through this early part of the journey and starting this trend, but also now from the other side of the table a little bit?
So I think on the opportunities, we've touched on some of the main ones in terms of investment in technology, breadth of services to clients. A couple of specific things. I think at Blick Rothenberg as a partnership, we would have lateral hires come in, but the investment on a year basis, you wouldn't want to run too quickly because sometimes they didn't work. There's always a lead time before you get a return on the investment. And obviously as partners, we wanted to protect our earnings each year. But in the PE model where it's slightly different and you've got the investment, you are able to go out and recruit people more quickly than you might otherwise have done. So certainly Blick Rothenberg post-sale, we had a significant uptick in the number of lateral hires that we brought in, particularly in specialist areas to strengthen the tax team, for example. I think the other thing that we've not touched on is actually the involvement of the people at the PE firms. So at Blick Rothenberg, I sat on the board and we had 2 people from HG who came to the board meetings. One of in particular I thought was super smart. I mean, I thought we were a really well-run practice, but it definitely upped our game, provided good insight, and helped take the business forward. And I think that sometimes gets overlooked. It's not just the money they're bringing, but they're bringing some expertise as well. I think in terms of challenges, I'm not sure it's specifically related to PE. I think it's more to do with fast growth firms. Is obviously on any acquisition, as you grow quickly, you want to protect the culture. So making sure you're acquiring firms that are a good fit with you. Obviously spending more time on communication to make sure people understand the journey that you're going on. I think that's critical.
Yeah, the communication piece is really interesting. I think it's very easy to forget the people in the practice and certainly people that have been there for a long time, and they see the investment come in and they might equate that to streamlining or changes, and whatever happens there's going to be changes in bringing people on that journey. Russell, I'll come to you with this question in a minute, but actually I just want to reference back to kind of working with Shaw Gibbs recently. I was part of a rollout of Silverfin in there, and one of the things that wowed me about the rollout was how Sarah and the senior team joined groups of people that were going to be adopting Silverfin and shared that vision and shared that kind of approach with them to very much bring them on the journey. And my assumption is that's what you do, Sarah, for all of the kind of your key projects. But how important is it to it's a silly question, right? But it's something I think we forget. How important is it to make sure that whilst you at a senior level have the vision, that your team understands and are bought into that vision as well?
Yeah, absolutely. I completely confirm what you've just said. I think actually as aggregators, we are better now at communicating with our teams. I think the pendulum needs to swing back a little to making sure we're also now looking and making sure we're building firms that our clients want and our clients are happy with, because ultimately you refer back to that question, why is there so much PE investment in the industry? It's because of that recurring fee base. We only have that recurring fee base as long as we have the clients. So absolutely communication, staff retention, but making sure we're also now checking back in with our client base to make sure we're fulfilling their needs.
Yeah, I think ultimately we haven't spoken about the client very much on this conversation, but the client is so critical to all of this, because ultimately if all the clients leave and go elsewhere, you may have a wonderfully streamlined, technologically savvy business with some bought in staff, but you have some very empty conversations at the end of the year. Russell, you've done this journey a couple of times, right? So from a few different perspectives. What are some of the opportunities that you've seen, and then off the back of that, some of the challenges that have arisen that people can learn from and that you've learned from, maybe?
Yeah, so I think without covering what the guys have already said on the call, because obviously, economies of scale, buying power, all of that sort of great stuff is one of the huge benefits. I think for me as well, it's the variety. I'm a product of this myself, right? I came from a professional background. I was on a partner track type plan, and being in this space afforded me to take a step in a different direction. So whilst I was an accountant, I probably didn't want to forever be an accountant and be in that bucket. Whereas now there's so many different opportunities and different roles that we can build out for teams. Like, you can really help foster more career development pathways. You know, we've seen it in various firms where they're investing in transformation, change management. You've got teams with, you know, project managers, business analysts, data analysts. Like, a lot of these guys have come and pivoted from within the business. It's not always external hires. And then you've got people like Paul, who's then pivoted out from that kind of, you know, operational role within practice as well. So for me, like, one of the benefits, and I'm definitely a product of the benefit, is the opportunity out there to move and create these different roles and niches for yourself. With that, obviously, is the challenges. For me, the biggest one, and Paul did kind of steal it a little bit before I got a chance to say it. For me, it's always culture. And you can unpack culture in lots of different ways, but the biggest challenge for any aggregator is understanding, first and foremost, what culture they want to develop and what that wants to look like for their business. And then how on earth do you get that between 5 firms, 10 firms, 20 firms, 50 firms, however you consolidate over time? Because it's really, really hard. And I've been through this journey a few times in different ways, both from being acquired and acquiring. And I always come back to culture being the biggest challenge, and bringing your staff, your clients along on that journey is really hard. But the benefit is that you can then stand these teams to support that up at the same time. So when we go back to legacy firms to implement, as Sarah said, new platforms, solutions, processes, really hard from a cost investment and a time investment. And a lot of time, people are doing this off the side of their desks. They've got their day job, they focus on their day job, they do this in the evening or in their own time. But being able to have an infrastructure that we can build to support this, I think is a huge benefit, and one that I didn't see in early M&A, but in more recent M&A, people are absolutely more focused on supporting the change, the transformation, the people part. And I think that's where we're seeing a lot of this surge off the back, is there's better infrastructure now for growth.
I think there's a whole webinar that we could run just around the culture element of aligning a cultural fit within a business. And Silverfin have been through this a little bit as well. We were acquired last year by Visma. And of course, Visma are a huge, one of the largest European tech companies out there, and one that maybe is a little bit under the radar in the UK because we're their first UK acquisition. But we've had to but we've become part of that Visma family, and that brings some fantastic benefits. And it brings some weird, quirky changes that you kind of go, oh, we have to now do that, which we didn't have to do. And it's nothing huge, but it's one of those little things that's just slightly changed, and somewhere it will impact someone within the business in a different way. There's definitely a whole webinar around the cultural thing. Sarah, Russell, I'm going to come back to you at the end with one question, right? So I'm going to give you a couple of seconds to think about this while I ask Paul something different. I want you to think about like the one thing, your one learning that you've had over the past 18 months in the journeys that you've both been on. What's kind of your key learning? So I'll give you a couple of seconds to think about that whilst I ask Paul a question. Paul, I want to, because Russell points out really, really neatly that you've jumped from, it sounds quite dramatic, right? You've gone from one side to the other. For you, what's been the most interesting thing looking at the world from the perspective you now see it, as opposed to maybe you were before? So was there something maybe like something you thought was one way, but actually now you're where you are, you look at it and go, oh, actually that's changed, or isn't there anything? Maybe it's exactly as you expected.
That's a difficult question. I think, there's been lots of changes from working in a firm as a partner, as part of a board, to going to working for myself. So all the things that I miss, the camaraderie, being part of a longer journey. So those things are a change. In terms of looking at accountancy firms from the outside looking in, I'm not sure I've seen that much that in other firms that I wouldn't have seen at Blick Rothenberg. I think we invested quite heavily, and Russell touched on it. We invested quite heavily in the support functions even before we went on the PE journey and doing acquisitions. So we had a good infrastructure to manage, whether that's HR, IT projects, me sitting across all the areas. I think I've seen a few firms go on the journey and not invest quick enough. So I think that's really important to have the right infrastructure in place.
Yeah, I think that's actually probably the best learning you can have, right? Is make sure the infrastructure in place and make sure that you can keep pace with the aspiration. I think that's always a tough one. So, Sarah, I'll come to you first. What's your kind of key learning over the past 18-ish months that you would take forward and not necessarily do differently, but maybe something that just you've kind of gone, actually, we did that quite well?
Well, so there have been thousands, first of all, being honest, but probably the key learning, and you will have heard me say this before, and we've already evolved our approach, is that when we merge with the business on day one, just being hugely open and honest about the change that will come. And most of it is changed to systems, tech systems, rather than actually going along for a couple of months and then being honest about that change. So, within the first week or two of working with the business, we will sit down as a senior leadership team from both businesses and work through the integration of every single part of our business. So all of the support functions, all of the service lines. So everyone is very clear from the outset what that looks like. It's not to say all of it will change on day one, but everyone is then very clear about the timelines for every part of our business. And like I say, that's something we've evolved already.
Amazing. I think that's a really good thing to take away. Russell, how about for you?
For me, it always comes back to people. So my focus would and is always on the people element. The biggest change impact is always to the people. Yes, there are processes and platforms and technology and all of this sort of good stuff, but the people have to use it and follow it. So the biggest impact I see going into any change, and what I've sort of thought about over the last sort of 18 months, but my last sort of nearly 12 months with Gravita now is that people impact. Like, the majority of the staff didn't ask for this. They're just part of the journey, right? But they have to accept it and get on with it. So for me, it's always think about the people, think about the communication, how it impacts them, and how you can support them through that sort of life cycle that they're ultimately going to go through, the good days, the bad days, and all the indifferent.
Yeah, I love that. Put the people first, which is fantastic. Now, I'm hoping you can see, if I put a slide up, is that worked? Maybe
quite.
not. That's fine. Okay, I'll try that one again. Best intentions. So look, I just want to say, Russell, Paul, Sarah, thank you so much for joining me today. This has been a really genuinely interesting chat. And, we started off by kind of framing this around kind of, the top 100 firms and where that sits within the UK. But actually, like the wider conversation around kind of M&A, the impact of private equity and the impact on businesses and everything else, I think is a really interesting conversation. And certainly we've seen the impact it's had to the largest firms in the UK over the past 12 months. And I don't foresee that slowing down over the next 12 months. We have an industry channel in Slack at work, and what we do is we post kind of key kind of events and happenings, and it's jokingly, because it's a global channel, everyone in Silverfin has it. It's jokingly become known as the UK M&A channel, because pretty much every day there's a new M&A story from the UK that goes in, and it's a super interesting conversation. So again, thank you all for joining us. So I've just popped up on screen, which I know you can see now, just to say thank you for everyone for joining us. If you'd like to know a little bit more about Silverfin, we have a live overview webinar on the 15th of January. So a 30-minute quick look at what Silverfin does. And my colleague Mark will be hosting that. And if you're interested in finding out a little bit more about Silverfin and how we work with firms, that's a really good opportunity for you to do that. And I'm probably left with not much more to say than thank you all for joining us today. Thank you to my guests for giving up your time and bringing quite an interesting, very interesting conversation. And I look forward to speaking to you all again in the future. And Yeah, have a great rest of your Thursday, and thanks very much for joining.